the daily activity in February for payments, for number of payments from one account to another for XRP was roughly 450K to 900K daily. In terms of transaction volume, that's about 900K to 2.6 million daily. And in terms of XRP payment volume, it's roughly been 200 million to about $1 billion daily. And in February, it peaked out at about $2.4 billion. And if we look at the number of active accounts in terms of unique senders on the XRP ledger, it peaked out at about 105K in December, and it's now declined to under 40,000. So here's some key observations and arguments within people in the XRP community. Number one would be declining payment volume, because if we look at the XRP payment volume from one account to another, if XRP aims to facilitate institutional and banking transactions, yet its volume is trending down, this is what's been concerning crypto investors looking into XRP, since macro market conditions shouldn't significantly affect institutional settlement layers, right? There's been a diminishing user engagement for retail traders and investors on the XRP ledger. Also, when we look at burn rate versus inflation, the burn mechanism is negligible compared to the 1 billion XRP unlocked per month, making the deflationary impact almost irrelevant. Now, when we compare XRP to other leading blockchains like Solana, Ethereum, or even BNB, we can see that the transactions in February from low to high, well, the XRP ledger has had roughly 900K transactions as of February 27th to about 2.6 million at the peak in February. And in January, it got a little over 3 million. Whereas if we look at Solana, we can see the transactions per second on the 25th were about 4,300. Now, you have to take that in terms of seconds and multiply that by how many seconds there are in a day, which is 86,400 seconds in a day. So if we take 86,400, multiply that by 4,300, on the low end, we get about 360 million transactions to about 415 million on the high end for February for Solana. Now compare that to XRP's 900K to 2.6 million, 360 million to 415 million is a drastic difference in transactions. Now, when we look at Ethereum, the total transactions for February 26th was about 1.2 million. So on the low end, about 1.1, on the high end, about 1.4 for the month of February, which is more comparable to the XRP ledger. If we look at BNB, we can see total transactions on February 2nd was about 4.2 million. So BNB is roughly 3.7 to about 7.5 million per day at the peak in February. Now keep watching to the end of this video, and we're going to get into why is Solana's transactions so much higher than Ethereum, BNB, or the XRP ledger. So hang tight, you guys are going to absolutely love this video. Now let's talk about stablecoin transfers in February, because to truly understand adoption on chain, we would want to understand stablecoin volume, right? Well, if we look at the daily average here, the data isn't as transparent for the XRP ledger, because on xrpscan.com, we can see things like number of payments from one account to another, number of transactions executed, XRP payment volume from one account to another, or even number of active accounts, but it doesn't necessarily show stablecoin transfers specifically. But if we go to artemis.com, we can see this data for Ethereum, Solana, BNB chain, and other popular blockchains. So for example, the XRP ledger payment volume is roughly $200 million to $1 billion daily. Now, that would assume that stablecoins are included in that. So the stablecoin transfers is less than $1 billion daily. So a fraction of the 200 million to 1 billion would account for stablecoins. Now, if we look at Solana, we can see it's 9.9 billion in stablecoin transfer volume for the day. So we'll round it up to about 10 billion. We can see Ethereum is at about 40 billion, and BNB, or the Binance Smart Chain, is at 4.4 billion. And if we look at active addresses on chain, which shows how much user activity there is, well, in the upper left, you guys can see that as of January 28th, the active accounts was 40,000. And since the dip in February, the number's most likely less than 40,000 from now. So once this updates for February, we'll see the true data, but it's most likely less than 40K, which is staggering considering Solana's daily active addresses is 4.3 million. So under 40K versus 4.3 million. That's a drastic difference. And this is one of the main arguments that people who trade on Solana versus XRP, or they believe that Solana is going to gain more adoption than XRP because of the daily active addresses. Also looking at Ethereum, there's about 409,000 daily active addresses. And then looking at the BNB chain, there's 1.1 million. So here are the key takeaways that we need to talk about from this XRP on-chain data in comparison to other chains like Ethereum, Solana, and BNB. Number one would be low stablecoin usage. While ETH, Sol, and BNB move billions in stablecoins daily, the XRP Ledger's transaction volume lags behind significantly. In weak transaction throughput, despite XRP Ledger's advertised efficiency and high transactions per second, other chains process significantly more transactions per day. Example, Solana's 415 million versus XRP Ledger's 2.6 million. On top of the limited active accounts, with Solana and BNB having well over 1 million daily active addresses, while the XRP Ledger struggles to maintain above 40K, XRP is drastically underperforming in volume and adoption compared to the top altcoins on chain. So declining transaction volume and active accounts indicate weak growth. So what are your guys' thoughts on XRP Ledger's future? Can RLUSD, their stablecoin, turn things around for XRP and Ripple? Drop your thoughts in the comments below. One would be the XRP Ledger's on-chain metrics. The claim is that the XRP Ledger's transactions, payment volume, stablecoin transfers, and active accounts lag behind Solana, Ethereum, and BNB, exposing adoption struggles. So what we need to first do is differentiate adoption versus dilution and what actually drives mass adoption. So keep in mind that all through February, since February 1st, Solana's market cap has dropped over 40%. And if we measure from the 19th of January, it's dropped over 54, almost 55%. Ethereum has dropped over 20 to 30%. Even at that massive wick, it was like 37% to the downside. And the Binance Smart Chain has actually done a little bit better. It was down 26% with that tariff wick down here by the 3rd of February and bounced all the way up to $104 billion in market cap and, is down roughly 19 to 20%. Whereas XRP has dropped from about 170 billion in market cap to about 126 billion, so about 20 to 30%, similar to BNB. Now, this is super important to know because a lot of the on-chain data is showing sell volume and liquidations from retail traders getting wrecked on different meme coins and other low market cap altcoins on those chains like Solana, Ethereum, and BNB, and even the XRP Ledger as well too. But here's the drastic difference. Look at the total amount of altcoins on each chain. Solana has over 20 million tokens, Ethereum over 1 million tokens, BNB chain over 4 million tokens, and the XRP Ledger is well underneath 1 million tokens. I think it might be like a few thousand or maybe a few 100,000. Well, this is massive because on-chain volume, like the 200 million to 1 billion for XRP Ledger daily, compared to Solana's 10 billion or 40 billion for Ethereum and 4.4 billion for BNB and stablecoin transfers, captures all blockchain activity, not just buy or transfer volume from altcoins. So this includes, number one, trades, that's buying and selling on DEXs, so like Uniswap on Ethereum, PancakeSwap, Binance Smart Chain, Jupiter, or Radium on Solana. So number two would be transfers, moving tokens like stablecoins between wallets. If someone were to sell a meme coin like WIF and transfer the stablecoin, whether it be USDC or USDT, wrapped on any of these chains to another wallet, that counts on chain. So during the recent market dip, with the majority of millions of cryptocurrencies selling off on these chains and people transferring stablecoins, it's not necessarily an accurate representation, in my opinion, of mass adoption, because it's really been a meme coin casino over the past year, where retail's coming to the market and they've just bought anything with a dog name on it because they saw what happened with Shiba Inu, they saw what happened with Dogecoin, and they just don't want to miss out on the next 100x meme coin. So number three is smart contract integration, like DeFi staking, NFT minting, etc. This is where Solana, BNB, Ethereum has put hyper focused on to attract retail investors. And so number four would be stablecoin movements, payments or swaps like USDC, USDT, or other stablecoins. Those are just the two most popular ones. Because Ripple's stablecoin RLUSD is so new, its market cap is much lower than USDC or USDT. So for Solana, for Ethereum, for the BNB chain, and other layer ones with their millions of altcoins, 25 million plus respectively, selling volume from these tokens and all of the tokens on chain contribute massively to on-chain data. So during February's market drop, retail sell-offs of meme coins and low-cap altcoins likely spiked volume, especially on Solana, for the 10 billion stablecoin churn and Ethereum's 40 billion. And with blockchain explorers like DeFi Llama, Etherscan, BSC Scan, they aggregate this activity and they don't break out specific like sell volume from, let's say, Dog with Hat on Solana or a random BEP20 token separately. It's baked into the totals. So yes, the 25 plus million altcoin sell-offs are tracked within those figures, amplified by February's crash. but they're mixed with buys, they're mixed with sells, transfers, and other DeFi noise. So this is where dilution comes into effect versus adoption. The industry does not need millions of altcoins in order for adoption to take place. In fact, we will actually see the opposite happen as clear regulation comes into effect. There will be a great purge as retail runs to utility when they constantly get wrecked, losing 70 to 99% of their income in newer projects that have no utility, that are just going to launch, pump up really quick, and then crash really fast. So nobody can deny that XRP Ledger's on-chain numbers look smaller. They look bad at first glance on surface level, but let's not confuse on-chain data as true adoption because they're just public ledger snapshots. It's mostly retail noise. And where the real action is and where it's been happening is on private ledgers and through OTC deals, specifically with XRP. For example, Brad Garlinghouse has confirmed that Ripple has partnered with various central banks over in the UAE, Bhutan, Colombia, etc. to test the XRP ledger privately, as noted in 2023 and 2024 interviews. Now we need to talk about what is going to drive real world adoption, not just casino trading from people that are coming in to speculate or to gamble. That would be the XRP Ledger's main value proposition, to provide a fast, low-cost, decentralized ledger for facilitating transactions, primarily supporting use cases like cross-border payments for financial institutions such as banks and payment providers, rather than focusing specifically on retail altcoin traders who want to gamble in the meme coin casino. Now, they do have the thing like First Ledger, and XRP has been expanding in the DeFi space and in the DEX space, but not nearly as much as Solana or Ethereum or BNB, because those chains have been driving higher on-chain volume because their value propositions focus on scalable, programmable blockchains for DeFi, decentralized finance, non-fungible tokens, and trading, attracting retail and developer ecosystems that churn out visible transactions like swaps and mints on-chain. So Ripple's main target market is different. They have openly announced that they have partnered with banks like Santander, Bank of America, Standard Chartered, PNC Bank, American Express, HSBC, DBS Bank, Royal Bank of Canada, Westpac Banking Corporation, Canadian Imperial Bank of Commerce, and tons of others that they haven't disclosed yet because they're most likely on non-disclosure agreements. So these banks collectively handle tens of billions of dollars daily in overseas flows. For example, HSBC is roughly 10 to 15 billion. Bank of America is about 5 to 10 billion. Santander is about 1 billion. So a conservative total for, 15 of these banks might range from like 30 to 50 billion dollars daily, based on their size and market data like Swift's $5 to $10 trillion daily global volume. So this doesn't include all of Ripple's partnerships. And these institutions use RippleNet and private ledgers for high-value, low-cost cross-border transfers. So it is tricky because public data on-chain tying XRP usage to these banks' daily flows isn't fully available on-chain yet because RippleNet offers two main flavors. That would be payment messaging like Swift and on-demand liquidity, which uses XRP as a bridge currency. So banks, they favor OTC, which is over-the-counter deals, and private ledgers where big XRP moves happen off exchanges and they don't cleanly show up in public on-chain data, is the OTC data doesn't cleanly show up on these charts. So example, a bank that wants to do a $500 million OTC deal might show as one quiet transfer of XRP, but it's not going to show as buy or sell volume. And how I know this is because I have worked on brokering OTC deals for massive whales that hold lots of crypto. We're talking about billions of dollars. And they might get something like Bitcoin in exchange for USDT on Ethereum, so they transfer it across the Ethereum chain, or they might transfer it from US dollar in their bank account. So you don't get to see that on the XRP ledger in terms of stablecoin transfers. So BNB's $4.4 billion, Solana's $10 billion, and Ethereum's $40 billion stablecoin churn is retail heavy. The XRP ledger targets $1.8 trillion in Nostro Vostro cash, tokenized real-world assets, the FX markets, and CBDCs, which is serious utility over altcoin bloat and dilution. So we're talking about completely different beasts here because banks may use private ledgers, which Ripple's technology allows, and public on-chain volume could dip when retail adoption grows off-chain through NDAs, non-disclosure agreements, where the vast majority of retail investors don't even see what's truly going on behind closed doors. So if you go to this document right here, I'll leave in the link in the description below, and you see page 5 in this remedies and final judgment document, OTC XRP sales to institutional buyers. So this includes banks, CEOs of massive companies from 2013 to 2020, most likely under NDAs for a lot of them, driving adoption in visible on-chain for the XRP ledger data. Also, Ripple CTO David Schwartz, aka Joel Katz here on Twitter, who used to work for the National Security Agency, the NSA, said that the value of XRP on the private ledger will be worth the same amount on the public ledger, but he didn't say when. Now, if you guys listen to that closely, he also said, unless something is wrong, and he referenced capital controls. Now, capital controls are government restrictions on the movement of money or financial assets across borders designed to stabilize economies, protect currencies, and manage crises. So are there capital controls right now? The answer is yes in a few countries, but banks overall, they just limit the money in the amount that you can put into the crypto market or the amount that you can send. If you guys have never sent a wire transfer of over $100,000, then you have to have a little device like this that's an RSA device that basically verifies your identity. So if you're sending a lot of money, whether it be through Wells Fargo, Chase Bank, they just have capital controls on how much you can send. So with more money comes more problems. They also don't communicate well with each other. This is why they are all switching to the ISO 20022 messaging standard by the end of 2025. So the main question is, which cryptocurrencies are ISO compatible? Well, XRP is one of them, XLM, ADA, HBAR, Algorand, XDC, Quant. And if you guys want to comment in the description below which one you're the most bullish on, and there are a few others as well too, but I do hold these in my portfolio. Now, quick financial disclaimer, I'm not going to give you financial advice. I'm not going to tell you to buy or sell anything. I'm just going to provide you with the data because these videos are purely for educational, informational purposes only. So